So I woke up this morning and I had an idea for a video. It's actually an idea that's been kind of percolating and it's been kind of in the back of my brain for probably a good week now, and it just kind of hit me. And so the thought was, crypto, don't do this. And it was really in the vein of really the opposite of that. What do I mean by that is I think that there's absolutely things that you should do to set yourself up for success in crypto. And this is coming from being involved in stock market investing and crypto investing, but stock market investing really for 30 plus years. That's, where the gray hair comes from. It's also a wife and a kid and dogs and all that kind of stuff. Being in my 50s, that kind of thing. But it really comes from the place of what you should not do is not have a plan. I realize it's a double negative. To be successful, in my opinion, in anything in life, you need to have a plan. And to me, there's a very, very simple plan to success in crypto. That encompasses a couple of things. Number one, you should have a plan for diversification in crypto. And that can be a very simple plan. It could literally be if you have 100% and you look at the type of cryptos you put money into, in my opinion, not investing advice, 60% of that money, of that 100%, should be in what I consider blue chip cryptos. Bitcoin, Ethereum, Solana, Polkadot, those types right there. And the majority of that, Bitcoin and Ethereum, and that 60%. Well, Austin, that's boring. Ethereum is boring. Bitcoin is boring. It's not exciting. Okay, I get that. But it is extremely stable. And actually, I would beg to differ. Ethereum is exciting. Bitcoin is exciting. In their own way. Okay. And to me, that's the bedrock of a really good diversification strategy. The other, so we've taken that 100%, right? And we say 60% is blue chip. Then to me, the next 20% is literally moving down the list of, say, the next 100, in the top 100 crypto. It's looking at other assets like metaverse plays, like Decentraland, Sandbox, Axie, to name a few others, okay? Or it could be a combination of those, along with maybe some NFT plays, along with some, strong ones in the DeFi sector. Other competitors to Ethereum, like your Phantoms, your Cosmos, Avalanche, etc. Okay. And so now we've gotten that 80%. So again, you see what we're doing. We're building a really good diversification strategy here. And then the other 20%, fun stuff. Maybe you're more aggressive, a little bit higher risk, like your new small cap tokens that just came out. And you're like, hey, man, I'm going to put $500 in this one over here. And if it hits, it's going to be worth a lot of money, things like that. You could also layer in into this other 20%, although some, I would say your, Shiba Inu could be in your middle 20%, that middle one, because it is, being in top 13 crypto. If you're wanting a community token, it's a good one to do. All right. But that last 20% is more of your kind of like, hey, it's really, it's more risk, things of that nature. But to me, that's a very simple diversification strategy to set yourself up for success. Okay. Again, in the don't do this vein, don't not have this. Yes, I realize it's a double negative. You should have a diversification strategy of some form or fashion. And the other big thing that you need in crypto is you need a profit plan. You need a plan in place that whereby you take profits. Again, it can be a very simple plan. And oh, by the way, it can be very much tailored to you. There's a couple of different ways at looking at taking profits. Number one, you can take the approach that I tend to take is a long-term buy and hold strategy. It's the strategy that's worked for me very, very well in stocks, where I buy a stock and I just simply hold it for a extended period of time, 1 year, 2 year, 3 years, and may or may not take profits along the way. But what I'm really doing is I'm saying, okay, I'm going to put this money right here in this asset, Ethereum, Solana, Shiba Inu, whatever it may be, okay? And I'm simply just not going to take profits until a year, 2, 3 years from now. And I'm holding for the long term. I'm going to hold for the bit, I'm going to hold through the ups, and I'm going to hold through the downs. Now that's a very it's a very long-term strategy. And I don't use that for every single thing that I put money into, but that's one strategy. A second strategy that's similar, you can have a long-term buy and hold strategy if you so choose, but have a plan to take small profits along the way, kind of bleed off profits, if you will. Okay, which allows you to maybe, and in that capacity, maybe you have a scenario where you're like, I want to make 30-40%, along the way, maybe to a bigger profit payday down the road. Okay. And then there's a third strategy that I have that I know a couple of whales who do this strategy. It's they'll get into an asset. These usually tend to be more of your kind of risky ones, more small market caps. That what they'll do is they'll put money in, and then when it triples, they'll take their original investment out, and then leave the remaining 2/3 in. Take the original out, leave the rest in, and then have a plan to take profits along the way, ultimately phasing out their investment. So those are different scenarios on profits. But remember, in the scenario of don't do this, you need to have, again, in my opinion, a diversification strategy in place, and you need to have a profit plan in place. If you simply do very simple plans around those two main pillars, then you will be successful in crypto to one degree or the other, and you will not be setting yourself up for failure if you do this stuff. Again, don't do this, meaning don't not have a plan and don't not take profits. Is that right? You get my point. Food for thought. As always, real simple. I'm just here. I want to help you guys make as much money as possible. And that's all I care about. Go make some money. I'll see you later. Bye.